Choppy session on the street with the benchmark now at the day's low and mixed trend in the broader indices. IT is the leader amid AI optimism and Wipro's new partnership announcement. Realty stays afloat while other sectors lag. Swiggy failed to secure shareholder approval for its proposed transition to an Indian-owned and controlled company. The move was aimed at giving Instamart greater flexibility under inventory-led quick commerce models, but concerns over increased founder and management influence weighed on the board. Stocks under pressure after disappointing earnings. Bharat Dynamics reported a sharp drop in revenue and profitability amid execution delays, while Bata India saw a profit hit by margin pressure, forex losses and VRS costs. Avanti Feeds also declined as weaker margins offset revenue growth. DEML also in focus. Interglobe is expected to report a weak Q4 with profits likely to slip into the red as yields and passenger load factor has come under pressure. Investors will closely track the airline's international expansion strategy and network additions amid the West Asia crash. Auto sales are expected to remain strong in May, with passenger vehicles and two-wheeler sales likely to post double-digit growth driven by improved affordability, new launches and healthy financing availability. Tractor demand remains supportive with regard to rural liquidity remaining and aiding tractor demand, while commercial vehicle growth is expected to moderate amid higher fuel prices and freight-related uncertainties. The RBI reported a sharp expansion in its balance sheet, which aided its record surplus transfer to government, higher earnings from foreign assets, rupee security and a surge in gold valuations boosted income, while gold share in RBI's foreign assets climbed significantly amid rising global prices and a weaker rupee. Hello and welcome. In fact, Asian Paints numbers breaking as we speak. You're watching Closing Trades here on ET. Now I'm Harsh Saita, with me Sajid Mangat. Very quickly on to those numbers. Let's quickly pull out what the revenue really looks like at this point. We obviously had an expectation of around 8,700 crore rupees of revenue for Q4 FY26. We await that number, but profitability 1185 crores. So it's surely a beat on PAT. 1043 was the estimate. 1145 crore is 1185 crore is where that number has come in at. So surely a better number in terms of profitability, whether it's revenue led or whether it is led by margins. We'll have to wait and watch. I'll just quickly wait for those numbers to come on screen. But 23 rupee dividend as well, which has come through with regard to the Asian Paints Q4 numbers. Post the Q4 numbers, they've declared 23 rupees of dividend. 9,246 crore is surely a beat on revenue, so it's a revenue-led beat. 8,330 crore was the base, and instead of a 5%, you've seen a 10% growth. So surely a beat with regard to top line, and that is likely driving profitability higher. We'll wait for that margin number to come, very quickly you're looking at that flash where profit has come in at 1,186 crore. 9,300 crore on the top line, which is built in, which is a 10% growth on a YOY basis, a 10+% growth on a YOY basis. So a double-digit growth coming in with regard to profitability. Sharp surge, a double-digit growth in terms of revenue, a sharp surge in profitability. You're seeing the stock be volatile. EBITDA also is above estimates. 1185 versus 1043 crore based on the ET Now poll with regard to profit. Okay, so while we await the numbers, quickly on charts, Kunal, if you can give us a perspective as to how Asian Paints looks.
See, I think frankly on the charts, the stock has not done much on the longer term basis or on the medium term basis. Because start of 2026, the stock was at 2,900 levels, and it had fallen down to as much as 2,200 mark, and now coming back to 2,700 levels. So broadly, in the last 5-6 months, it's not done much. The stock has been down 200 points broadly, but then in the process, in the last say 1 or 2 months, where the stock has recovered from those 2,200 levels, it's come back above the 200-day moving average. So that's the only solace for the stock, that over the near term, we are looking at the stock trying to just about build itself very slowly and gradually above the long-term moving averages. That support for Asian Paints on the charts or the 200 DMA is around the 2550, 2600 levels. So which means that there's a decent enough of cushion or a buffer into the stock price, even if there is a short-term volatility.
By and large, we have seen paint companies posting a very good set of numbers because of the price action that has happened in Q4, and volumes have also been better. So 10% jump is a good number which is coming in. On the profit side, it looks like a big jump, but I think Q4 of last year was a pain point for many of the paint companies. So it's a low base on which the growth has come in. So, but interesting to see how much of volume growth they got and how much of price action. But price action is something which we have seen across the board, like Berger and others all have mentioned about it.
Yeah, margins also far better than what was being penciled in, and therefore what you're seeing is a margin uptick as well. The EBITDA margins have come in at 19% plus for an Asian Paints. So you're seeing margin uptake, top line growth, all of that playing out. Really, the question is that is the worst over with regard to paint stocks? But Sajid, the other moving part with regard to paints is crude and the move on crude. That is not fully built in yet. Yes, very likely they'd be having crude stocks which would have helped them in Q4. That will not do. That will not play out in the same fashion in Q1 FY27.
True. Q4 there would have been an inventory which would have been at a lower level. Q1 means April and May is when we have seen large spikes coming in the crude derivatives, and as a result of which there will be pressure on the margins going forward there. But we also seen around 6 to 8% price actions across the board by various companies which have taken. They have not been able to pass on the entire crude impact to the consumers. So there would be a muted impact with respect to EBITDA margins there. But yes, profitability will be under pressure in Q1 because full impact of the crude price increase has not been passed on to many of the companies.
Okay, so that's the other overhang that you want to take care of when it comes to Asian Paints, and of course commentary will come through. We'll get a better perspective as to what's playing out with regard to Asian Paints. But really, that's the play. Let's quickly have a look at what markets are up to, and we've seen some bit of pressure coming in, especially after that morning move, which was positive. We're now seeing 160 points lower on the index. Kunal obviously continues to be with us. Kunal, what's the sense? What's the play here now?
Yeah, we were looking at the retest of 23,750 mark for the Nifty spot. I think that retest is now done for the index. The interesting bit is that even at a point where crude oil prices are down towards 91, 92 on the Brent crude, there was a point where our markets showed some sort of a comeback in the first half an hour, first 1 hour, but that got sold into because of the pressure of so many large cap names, and the large cap private sector banking names lands under pressure for itself throughout the day. So I think on the back of this, you're seeing the indices under pressure. But the mood of the market has really been the mid caps and small caps, because that's the one, that's the one pocket where you're still seeing strong bout of outperformance. You're still seeing the mid cap and the small cap index, the last I had seen, doing very well for itself. Many of the stocks seeing price volume breakouts on multiple time scales. So I think on that front, we would probably expect that the index movement could remain a little bit more lackluster. The range for the index is 23,750 on the support on the downside, as well as the resistance on the upside is 24,000.
Okay, the resistance on the upside is 24K. Kunal, near term, breaching that likely to be difficult. 250 points plus from here.
See, I think we are trading into this band, into this range. So what's happened today is, this 150 odd point cut on the Nifty. We've closed a gap which was created on the hourly charts for the index 2 days back or 3 days back. It's more like a mean reversion when the market gets into a bit of an excess. There is an gap up which gets formed. The market tries to float above those levels, but then in the process, when the market goes into a mean reversion phase or normalization comes back, that's where those gaps gets filled. I think we've just completed that process for the indices, and that's why I would probably believe that over the next 1 or 2 days, we just need to watch this trading range, because once the gap gets filled, there could be either a possibility that the index can drift lower. That would depend on how strong we break this support of 23,750 mark, as well as on the upside, if we manage to make a comeback, we need to see evidence where the index sustains about 24,000 levels sustainably. So I think that's why I would probably just about stay on the sidelines in terms of the index views, but these are the two levels to watch out for.
Aggressive call writing which is happening, roughly around 12:30 onwards, which we have seen, and now the put call ratio is around 0.7. Do you see this going to be some kind of resistance for the Nifty, because Nifty is testing the 23,750 levels at this point?
Yeah, it should be a resistance of sorts, because when you see excessive amount of call writing, and it started off at the start of the day when the index was very close to that 24,000 mark on the spot. We were at 23,950, 960 approximately on the index spot, and from there is where you'd seen a good amount of, I would say, a confident kind of a call writing, because the expectation was that maybe, hey, the markets would not break above those 24,000 levels. So why not build up some shorting on the call strikes? So I think that's what we've seen, those confidence emerging. Now we need to see two data points. So what's happened is, at the start, when the markets started to see a call writing build up, the IVs for the Nifty were at the India VIX, that is, was at sub 15 levels. Now we are nearing 16 mark on the India VIX. So that advantage which option writers would probably have got would somehow probably have been pared down because of the rise in India VIX. And that's why I would probably believe that these are the two trends to watch out for. One is in terms of the index. Say if we make a comeback about 24,000 mark, that's one level to watch out for. But then the manner in which the index comes back about 24,000 levels, that would depend on, say, the IV is falling down to back to 14.5 levels, or if the IV stays at 16 odd mark, that would determine the sanctity of the breakout. So that's why I would believe that the bias so far is not indicative of any kind of a major trend developing on the indices.
Okay. So that's really the trend. What's the trend with regard to the Bank Nifty, Kunal? Very quickly before I slip into a break.
So even for the Bank Nifty, I think what's happened is, today after this 300-point cut odd for the Bank Nifty, we'll be falling back below the 50-day moving average. Now, apparently what has happened is, in the last 3 occasions in the last 1.5 odd month, when the Bank Nifty has fallen, or rather re-fallen below the 50-day moving average, the trend over the near term for the Bank Nifty has gotten weak. So I would be a little bit more skeptical on the Bank Nifty at the current juncture. And if you sustain below this 50 DMA level, that's 54,480, 500 on the spot levels Bank Nifty, there could be some more pressure emerging.
Okay. All right. So that's the take. This is broadly the way we're set up. What we're going to do is slip into a very short break, come back, talk more. Plenty to speak about. Asian Paints, of course, now up 1.3% on the back of those numbers. Strong numbers. Stock has already run up quite a bit. Continues, given the kind of results they've posted. We'll come back with more. Stay with us.
Welcome back. You're watching Closing Trades, and the market currently hovering just around 23,750 mark, trying to hold on to that level at this point in time. Moving on to market guest, Pramod Gabi, who is from Marcellus Investment Managers, joins us. Pramod, hi. Incidentally, you have the Asian Paints number which have come out. Top line are up nearly 10%. Good jump in PAT and margins as well. How do you look at the paint sector and Asian Paints if you look at that company?
Yeah, no, I think the key change has been the industry structure. The sector, after a long period of very stable, competitive intensity, went through a big new entry from a couple of new entrants, which increased the competitive intensity over the last couple of years. What we're seeing now is that intensity stabilizing again. Looks like the market shares are settling in. And that's reflecting in the volume growth, and the margin pressures also easing in. However, in the short run, of course, the concern around input cost, which is raw material, largely crude derivatives, given where crude oil prices are, that remains an overhang. But from a longer term perspective, I think it is encouraging to see that the competitive intensity is stabilized. And yeah, I mean, once crude oil prices cool down, you can expect a much more stable earnings growth trajectory for the sector as a whole, and within that, Asian Paints as well.
Hi, this is Harsha, by the way. So what would your top concern, or top question to possibly Asian Paints be ahead of the con call? What is it that you'll really look out for in terms of commentary?
So again, we look at it from a distance, but I guess on the ground, they'll have a better sense in terms of the feedback from the dealership as far as competitive intensity is concerned, because that's been the driver at the margin over the last couple of years. But over the last couple of quarters, you've seen some sense of stability returning here. You would want to affirm that there is no more aggression from the new entrants. And secondly, Asian Paints itself has invested a lot in terms of vertical integration. They're bringing in some of the raw material manufacturing in-house, which not only expands the margins, but also gives an advantage over competition in terms of pricing. So would like to understand where that is, because it is a long gestation project, but we're nearing that time frame where it comes on stream. So these two can be key drivers, both industry structure as well as raw material price integration.
Pramod, aside of Asian Paints, have you had a look at other paint companies as well? How the quarter has been? Is the pricing pressure, freedom back to many of the players? Are they able to pass on the prices?
Yeah, I mean, it's we're at the fag end of the real estate cycle, and typically building materials tend to benefit. We were saying not just in terms of paints, across late stage building material companies, volume growth has been pretty good, whether it's plywood or electricals or pipes. So we're seeing the benefit of that. To that extent, demand environment is much better than what it used to be. Right at the same time, we're seeing easing competitive pressures. To that extent, there is pricing power. It is still a consolidated industry for that matter. To that extent, yeah, I mean, it augurs well for margins, barring the short-term concern around crude oil prices or raw material prices.
And what do you make of the earnings, Pramod? Just take a bit of a step back. Earnings overall, we're at the fag end now of the Q4 numbers. It's looking like a very decent set of numbers that India Inc. has come out with. 13% growth on the Nifty 100 basket in terms of profitability YOY, a bulk of that coming in Q4. So the QOQ growth numbers looking extremely strong overall. Sustainability really the question?
Absolutely. I think we're reversing the situation from the last couple of years. Last couple of years, the macro looked quite sanguine, whereas we were struggling to see earnings growth just when valuations were pretty high. I think that earnings cycle seems to be bottoming out based on what we've seen in Q4. Clearly, there are more upgrades than downgrades. However, at the same time, while the micro seems to be looking up, we're facing macro headwinds in the form of crude oil prices and all the attendant issues that comes with that in terms of rupee depreciation, inflation, fiscal deficit, rising bond yields, and so on. So we've sort of completely reversed the situation between the macro and micro. Now, clearly, the macro also put some challenges in the micro, like we discussed in the case of paints. A whole host of other sectors will face raw material price pressures. Not all of them will have the pricing power to pass on those costs as well. Alongside that, interest costs are likely to go up, borrowing costs are likely to go up. So just when we thought that the earnings cycle is bottoming out, we are faced with these macro headwinds, which puts a question mark in terms of the sustainability of the recovery in earnings. So, I mean, the jury is out in terms of how long this, pressure or the West Asia situation persists, which in turn has an impact on the Indian macro and eventually the micro through the conduit of crude oil prices. Barring that, I think we should be looking at bottoming out the earnings cycle.
Natco Pharma's numbers also came out. I just want to quickly highlight them for viewers because the stock's taking a knock of 9%. The revenue is coming at 740 crore versus 1221 crore on a YOY basis, down 40%. EBITDA is down 77%. Margins have contracted from 45% to 17%. And profitability has fallen 34% on a YOY basis from 407 to 268. That stock taking a bit of a nosedive in trade. There you go. You can see that move. 8.5% lower on Natco Pharma. Fact is the other one. I mean, the numbers don't look half bad. Okay, so there's margin erosion there. Actually, in fact, margins have come in at 3%. Versus the 8% number same time last year. Pramod, I'll just come to you in a minute. I'm just going to quickly try and analyze these numbers. So margins have come off quite sharply on a YOY basis. QOQ, there were negative margins in December. So those margins turning positive, at least QOQ hint at some recovery. EBITDA has come in at 48 crore versus 84 crore. Revenue has come in at 1484 crore. So revenue, in fact, has come in below both the Q2 as well as the Q3 numbers. In the Q2 it was 1600 odd crore, in Q3 it was 1550 plus crore, in Q4 it's sub 1500 crore. So maybe that's one of the pieces which the street is worried about. But that loss, EBITDA loss as well as bottom line loss seems to be reversing. I'm talking about fact this time around, which is FACT. So you've got that stock also under a bit of pressure. So both of those names, Natco Pharma and Fact, this space overall, Pramod, has done fairly well for itself this earnings season. You've seen chemical stocks, fertilizer stocks actually doing fairly okay. These may be, one-offs in terms of the numbers and the street really not taking it well. But give us a sense, how would you play the theme? Fertilizer, chemicals, pharmaceuticals, how are you playing that basket?
I think pharmaceuticals and chemicals particularly is in a good position, both from a structural perspective as well as a cyclical perspective. We're seeing the worst of the US pricing pressure behind us. We're also seeing the worst of the excess supply from China, particularly in chemicals, also easing up, which augurs well from a cyclical standpoint. To that extent, it is also back, particularly in pharma. Valuations aren't that onerous, and hence I think we are in a good point in the cycle for both these sectors.
If you look at some other pharma stocks as well, we spoke about Natco, but Wokhard up 17% in today's trade. Some of the pharma companies are doing well, especially with those which have a domestic footprint. What's your take in some Wokhard, if you look at it, or the domestic exposed pharma companies?
Oh, absolutely. Like I said, healthcare in general is a fairly structural theme. We've been talking about for a while across hospitals, diagnostics, and pharmaceutical from a domestic standpoint. And that continues to play out both in terms of earnings, new launches, and to that extent, I think it's one of the few places where you are seeing reasonably strong structural growth prospects, at the same time reasonable valuations as well. So that remains one of the bigger allocations for us.
Okay. Pramod, I'm going to have to pause this conversation, take a quick commercial, which is mandatory, unfortunately, come back to you, quiz you more. What are you buying? What are you selling? It's a tricky environment. We'll try and take that question with Pramod once we're back. Thanks for staying with us, and Pramod obviously with us as well. Pramod Gubi of Marcellus Investment Managers. Pramod, give us a sense. So it's a tricky market. What do you buy? What do you sell? Do you continue to hold? How should one play it?
Well, I mean, like I said, at the margin, it's the macro which is crucial, but we tend to be bottom-up investors to that extent. We're macro aware, but we're not basing our investment decisions on that. Having said that, I think purely from a valuation standpoint, in a market where, yes, valuations have somehow corrected, time corrected in the last 2 years, they're not as expensive across the market as they used to be, but still, I think across the board, you can't say that you're seeing compelling opportunities from a valuation perspective. So purely from a valuation perspective, private sector financials continue to demonstrate that they are at compelling, undemanding valuations. But from a growth perspective, we talked about healthcare being one of the areas where we're seeing structural growth opportunities. The other, from a macro perspective, which has given us an opportunity, is manufactured exports. I don't think even in any scenario the rupee will reverse materially. You might see a little bit of a reversal, but to this extent, the rupee depreciation has made some of our manufactured exports fairly competitive. Just when the rich world, the West, is reindustrializing itself, particularly in the areas of the electricity supply chain, whether it's turbines or transformers, we're seeing pretty good growth prospects globally. At the same time, there are some very good high-quality Indian companies in this supply chain, and they get an additional bit of a tailwind in terms of the rupee depreciation to grab further market share. So these three areas, I think, financials, healthcare, and manufactured exports would be where we see a lot more opportunity.
Pramod, aside of consumption, are you also looking at power and capital goods? Because power stocks have been running up in the last few weeks. Do you think that there is investor interest back in power?
No, absolutely. Like I said, irrespective of how this AI-driven rally pans out, AI is here to stay. And as we've learned, the limitation for AI's progress today is electricity. So therefore, there is a bit of a rush from pretty much across the world in terms of putting up new power generation capacity. And therefore, anybody supplying into that demand is likely to benefit. And it's not just in India, across the world, more so in the Western world, where bulk of the investments in data centers is happening. That's where the energy needs are quite rampant. And we do have some very high quality Indian capital goods companies which play into that demand opportunity. Of course, India will also have to invest in terms of power generation if it's not if the fact that AI will be reality going forward. So whether it's domestic or international, I think playing into that supply chain is a very good structural opportunity.
Okay, Pramod, thank you so much for coming in and speaking to us and giving us that perspective today.
You're welcome.
All right, let me go across to Avi. He's here with other stocks that are buzzing in trade today.
Let's discuss some stocks that are trending in news. Starting right off from GMR Airports, which have posted a very good set of results, and the company has posted a positive PAT on a full year basis for the first time in the past decade. They've also undertaken some debt restructuring by issuing NCDs worth 2100 crores at 7.6%. This will lead to an interest cost saving of 150 bips. The overall traffic guidance for the coming year is in the range of 5 to 7%, with H1 expected to be softer and recovery to be seen from H2. Our next stock up is V2 Retail, which has posted a very good set of numbers, but the stock is seeing some very hard selling pressure. The PAT has almost grown 3x from 6 crores to 18 crores and a margin expansion of around 200 bips. The company has beaten its own store addition guidance even after hiking it in the middle of the year. So what might be causing this drag is the fact that the sales per square feet continues to weaken, with the festive quarter in Q3 seeing some growth, but overall it is flat. Talking about the next stock, which is Ashok Leyland, is also seeing some selling pressure on account of its Q4 earnings. The management says that the demand for CV is expected to be resilient despite the ongoing uncertainties, and they will focus on selling the CVs to the Southeast Asian countries. And they have guided for a margin in the mid-teen range for FY27, but the Q1 FY27 profitability to be impacted by commodity inflation, and multiple price hikes are likely to be seen going forward. The Chennai battery plant, the construction for which will start in the next 30 to 60 days, and production is expected to start by Q2 in the next year. Talking about our last stock, we have PB Fintech is seeing some very hard selling pressure because of the fact that the promoter is selling a 0.8% stake at a floor price of around 1720, which is around a 3.6% discount to the previous closing. The total deal value is at around 653 crores, and as of March 31, 2026, the promoters, which is Alok Bansal, holds 1.16% stake, and Yashi Dhaiya holds around 3.86% stake.
Thank you, Avi, for that update on PB Fintech, the block deal. The promoters sold roughly over 600 crores worth of stock in morning trade in the block deal window. The stock down nearly 4%. Let's look, reach out to Ajit Nayak as well from HDFC Securities. Ajit, hi. How do you look at PB Fintech? The stock down 4% after the block deal. Ajit?
Yes, sir. One second. I'm just checking the stock. PB Fintech. Structurally, the stock is not looking so great. So I think there is some more correction left. So after that correction, we need some good consolidation and a rounding pattern. So once we see that kind of a pattern, then there is a good opportunity. Having said that, 1600 is a good support for this particular stock. If it tries to hold the stock, then some again bounce, we can see a technical bounce can be seen. But crossing the hurdle of 1900 would be little difficult for the stock, because the stock is not in a healthy uptrend as of now. Though it has bounced sharply from 1300 level, still conviction need to be built. There is no technical good setup which is forming as of now.
Just hold on, Ajit. Let's go into a short break and come back, and we'll discuss the last 45 minutes of trade, where it seems that the market is getting a little choppy and trying to breach the come back above the 23,800 mark. Welcome back. You're watching the closing trades, and let's look at what's happening in the F&O market. The Nifty down nearly 0.5%, trying to climb above the 23,800 mark. Their premium of 85 and open interest is 15% jump. So that gives you an indication of the kind of shorts that's getting built in the system today. Look at Nifty Bank. The index is down nearly 0.4%. Open interest jump of nearly 0.8% there, and a premium of nearly 343 rupees at this point in time. The Nifty, it's across the board. You're seeing, for the Nifty Bank constituents, either short build-ups happening in the private banks, or there's a long unwind also happening in a couple of banks like Axis and SBI. The only bank perhaps adding some long position is Bandhan as today, while all other private sector and public sector banks are seeing some short build-up happening. Call and put writing has been very aggressive in the last 2 hours. Remember, we are getting into the last half an hour of trade where the MSCI rebalancing will happen, and a lot of passive funds will start either buying or selling the stocks in their portfolio to be rebalanced to the MSCI index. So you're going to see a big number coming in from the FIIs in today's trade there. So 23,800, 23,900 and 24,000 is seeing an aggressive call addition which is there. The distribution shows that you still have 23,800, which has a higher open interest for call writing. So the market trying to hover above the 23,800 mark, but there's some resistance which is coming from the call writers at this point in time. But let's look at for gainers. LTI Mindtree, the stock is up 4%, PG Electro is up 4%, Wipro is up 4% on the back of long build up, which I think the ADR was up 18% for Wipro in overnight trade. Futures losers include LIC. That's the adjustment which is happening for the 1:1 bonus that happened in LIC. BDL is down after a bad set of numbers, down 10%, and MCX is down 4.7% there. Open interest gainers, again, you have Radico Khaitan, where there's a long build up happening. BDL is seeing a short build up happening. Look at the open interest jump for Radico Khaitan and BDL. BDL open interest up nearly 52%. In open interest losers, you have Coal India. There's a short covering happening. Then Nuvama and Hitachi Energy is seeing some shorts getting covered in today's trade. Most active calls today: Asian Paint 2700 June call. After the earnings, it's become very active. 8 rupees up premium at 88. 4 lakh contracts added in the last, with a large chunk getting added in the last 1 hour of trade there. The stock hovering just below the 2700 mark there. If you look at the other Infi put, 1200 June put, you're seeing a premium down nearly 20 rupees to 42.60, and open interest gain of 4.8 lakh contracts. The stock hovering just below the 1200 mark at this point in time there. So it's an active call put writing happening. In next 10 minutes, you're going to have VWAP trading happening, where a lot of passive funds will start rebalancing their portfolios based on the MSCI rejig for May, and that's where we're going to see some kind of volatility coming in again.
Yeah, I want to pull out some of those stocks which will be in focus on the back of MSCI rejig. But before I do that, let me quickly quiz Kunal. Kunal, what's the take with regard to the Nifty IT? Because that's the index which is really standing out in trade today.
Yeah, it's a very strong move for the IT index. It starts off with the gap, today I think with a move about 29,000 mark on the Nifty IT index. And I think at one point we were almost at 29,750 mark. So it's a good 2.5-3% up move for the Nifty IT index. What we need to watch out for is a breakout of 29,750 mark, because on the daily charts, if we manage to see a breakout about 29,750 levels for the Nifty IT index, this could complete a huge inverted head and shoulder pattern on the IT index, and this could be almost like a 2,000 pointer pattern for the IT index at large. Then we look at the components of the IT index. Today, I think the move started off with Infosys making a comeback. I think at the start it was up 3.5 to 4%, led by the likes of Wipro, Tech Mahindra. I think is now coming closer to a breakout of its 200-day moving average, just very close to that 1500 levels. Coforge, Persistent, L&T Technology Services, etc. Many of these stocks have done phenomenally well for themselves and are now looking at possibly the second leg of a breakout on the upside. But the level for the IT index to watch out for would be 29,750 mark. I think if the index manages to close, say by first half of next week, then we could confirm that this could be a big developing trend for the IT index.
You know, the other set of buzzers that have dominated trade today is some of the OMCs. And within that OMC pack, of course, largely the moves have been due to the moves with regard to crude and the fact that the price at the pump have changed over the last week or so. And given the under recoveries, you'll likely see a very different FY27 versus FY26, both in terms of dividend as well as capex intensity and the like. Ashesha is here to break down those numbers for us.
At a time when global crude oil prices are surging and oil marketing companies in fact are going ahead and hiking prices in the petrol pumps in order to compensate for their under recoveries, questions are being raised as to where profitability was used over the last few years when crude oil prices were on the lower side. So we do the math for you and we try to break down where the profitability was used for by these oil marketing companies. So let's put the spotlight on each of the three oil marketing companies, HPCL, BPCL and IOCL. First up, let's talk about HPCL. Now in FY22, that's when crude oil prices were on the lower side, company earned a profit of about 6,400 crore, out of which 3,222 crores was given out as dividend to shareholders, which means 50% of the profitability was actually given out to their shareholders as dividend. Now remember, at a time when profit was just about 6,400 crores, company incurred a capex of about 16,800 crores. So clearly, companies were earning profit, but they were giving higher dividend and higher capex was being incurred, because of which most of the profit was actually utilized. Now shifting focus to FY23 then, the same is applicable. In fact, in this year, company incurred a loss of about 9,000 crores. FY24, out of the 15,000 crore profitability, dividend payout stood at about 14.5%, and 14,300 crores were actually used for capex. So is the case for FY25 and FY26 as well. The companies have given hefty dividend in the range of about 19 to 30% over the last few years, and most importantly, these companies have incurred hefty capex over the last few years, because of which most of the profitability and most of the cash flow that they earned at a time when crude oil prices were lower but retail fuel prices were higher was being utilized for. Shifting focus to two other companies then, and the trend largely continues to remain same for all oil marketing companies. We'll talk about BPCL then. In FY22, the profit stood at about 11,400 crore, but the company paid dividend of about 15,000 crore, in excess of what the company actually earned. And apart from that, the company also incurred capex of about 11,900 crores. So is the case for FY23, 24, 25 and 26 as well, where 40% of their profitability was given back to shareholders as dividend, and the company incurred capex of about 20,400 crores. Shifting focus to IOCL then, and the trend, as I mentioned, largely remains same. Profitability in FY22 at about 24,000 crore. 45% of this was given to shareholders as dividend, and the company incurred more capex as compared to the profitability at about 26,000 crores. So is the case for FY23, 24, 25, and shifting focus to FY26 then. Out of 36 crore profit that the company earned, about 37% was given back to shareholders as dividend, and the company incurred a total capex of about 32,000 crores. So over the last 5 years, when crude oil prices were on the lower side but petrol and diesel prices were proportionately higher, these companies were paying back dividend to their shareholders, and they were also incurring hefty capex, because of which all of the profitability has effectively been utilized.
Okay, thank you so much for that, Ashesha. That kind of gives us a very good lens into what's playing out. What we'll do is to do a very short break, come back with more. Stay with us here on ET. Welcome back, and some movers in the market. Amrish Baliga also joining us. He's market analyst. Of course, we still continue to have Kunal Bothra. We also have Ajit Nayak still with us. Amrish, before I come to you, and I'll come to you in just a minute, Ajit, what's the take on some of these private sector banks?
If you look at the Bank Nifty especially, so both Nifty and Bank Nifty, despite of the appreciation in the rupee and also the crude coming down, I am not seeing a traction which need to be seen in the Bank Nifty. It is getting a overhead pressure due to some of the private sector banks. So I think it's they have not yet settled down. Some more consolidation on the way, and I think there is some downside steam left in those private sector banks, especially in Axis and some in Kotak. They have not seen a good base formation. So once that happens, I think then we can see a rally in those sectors. Otherwise, for at least a couple of months, like 1 or 2 months, I don't see any good upside momentum in private sector bank as of now.
Okay, thank you, Ajit. We'll let you go on that note. Amrish, let me bring you into the conversation. How are you viewing the market? What are you doing?
In fact, the way I look at the markets is I don't see too much of a downside. Basically because there is still a hope, and that hope is quite high that there would be some sort of an accord between Iran and US. And I mean, as far as I'm concerned, hopefully by June 14th, which I think is President Trump's birthday, I think before that they should be able to sign off. So in case that happens, I think it'll be very, very positive for the markets. We'll see the oil coming down. And at the same time, I think the rupee also can appreciate from the current levels, so which should be positive. And I mean, most of the investors and analysts have discounted that the next 2 quarters may not be too great for the Indian corporates. So since that is discounted, the expectations also may not be too high. So, I mean, overall, if these things fall in place, I think monsoons is the only joker in the pack. So hopefully, if the monsoon is closer to normal, not as bad as what the current forecast is, I think we should have a decent run till Diwali or end of the year.
Amrish, how do you look at some of the consumer companies today? Asian Paints came out with its numbers, decent set of numbers, top line of 10% growth. How do you look at some of the construction linked companies or accessories companies?
In fact, if you're looking at something like Asian Paints, I think people were overly negative on this stock. I think it's been an underperformer for about 2 years plus. I mean, especially after Birla Opus was launched. I mean, the amount they were spending on publicity and marketing, and at that point of time, I think Asian Paints did the right thing of staying in the background for a while. Let Birla Opus just go out and splurge. And I mean, what have you seen in the last 6 months to 9 months? I mean, the ads and all that has reduced from Birla Opus, whereas Asian Paints seems to have still got its marketing and sales tactic perfectly right. And that's being shown in the sort of earnings which you have seen. So it didn't make sense for Asian Paints at that time to go and counter Birla Opus. They stayed in the background and they are back. I think they have bounced back, extremely well. So I would be quite positive on Asian Paints. In fact, I have a price target of about 3,400. I think it should be achieved in the next 6 to 9 months, because I suppose it would be more of a discovery when people have given up. And now when we see this sort of earnings, I think it'll be a new discovery for the market.
Just bring in the Nifty 50 chart at this point in time. You're going to see a steep fall coming in for the Nifty, and that's primarily because of the MSCI rebalancing which is underway, and there's some heavy selling which is coming in because of that. So the index now down nearly 1.38% below the 23,600 mark, Kunal.
23,750 as a support is breached.
Has been breached, and it looks like it's going to end below the 23,750.
Yeah, it's ending below the 23,750 mark, and the selling is of course emerged back into those larger cap names because of the MSCI rebalancing. So I think what it sort of indicates is that the markets are yielding back again into some sort of a pressure which originates in terms of large cap selling. The Bank Nifty is also down almost 500 plus points and is back below the 50-day moving averages. So the near-term trend for the indices, as you pointed out, below the support levels is on the weaker side.
Ashesha has been waiting by for a while. That's with regard to Q4 earnings and what this means for the overall Nifty 100 basket. We'll come to the Nifty 50 in a bit. You're seeing that pressure on the Nifty. We've taken Kunal's view on it as well. We'll continue to track that very closely. That's on the back of the MSCI rejig, of course, or the rebalancing, which is expected to happen over the next 26 minutes. But Ashesha here with that roundup from the Q4 numbers.
Well, yes, we are at the fag end of the earnings season, so we decided to take stock of summarizing how the fourth quarter has been. And first up, let's talk about the Nifty 50 companies. We just have Interglobe Aviation, which is set to report its numbers in just a couple of minutes for now. But other than that, 17 companies from the Nifty 50 index have beat expectations. 18 have been in line with what the street was working with. 5 companies have reported mixed set of numbers and 8 companies have missed expectations. So that's as far as the Nifty 50 scorecard is concerned. Let's talk about the broader basket then, and let's talk about Nifty 100 companies then. And cumulatively, on an average aggregate basis, these companies have reported a revenue growth of almost 10% on a year-on-year basis and about 5.5% on a sequential basis. EBITDA growth, meanwhile, of about 10.5% YOY and about 4.8% on a sequential basis. And EBITDA margins too have expanded by about 10 basis points on a year-on-year basis, but they've contracted by 10 basis points on a sequential basis. So margin compression is what we have seen in the fourth quarter for Nifty 100 companies, and profitability too has seen an increase of about 10% on a sequential basis and 13% on a year-on-year basis. So that's how the fourth quarter has been for the Nifty 100 companies. Let's talk about the top contributors then. And in terms of revenue, segment-wise performance is concerned, let's talk about Consumer Services Index, which reported a solid 57% YOY growth. This is basis Nifty 100 companies. Consumer durable companies reported a strong 53% YOY growth, and defense companies too also reported 41% growth. So these are the three sectors which reported most revenue growth in the fourth quarter on a year-on-year basis. Let's also talk about other parameters then, and let's talk about revenue laggards, three sectors which performed poorly in the fourth quarter. And at the top of this list is the real estate sector, where revenue has seen a decline of about 11% on a year-on-year basis. But remember, the important metric to look for too, as far as the real estate sector is concerned, is the pre-sale. So this will not give you the right picture. Power sector has reported a muted 1% growth, and oil and gas sector has also relatively given a muted revenue growth of about 6% YOY. So these are the three sectors which have performed poorly in the fourth quarter on the revenue front. Let's also talk about EBITDA and profitability then. And first up, EBITDA. Three sectors which have reported most EBITDA growth in the fourth quarter: defense at 53%, metals and mining at 41%, and consumer services at 39%. The top three sectors which have given the highest EBITDA growth in the fourth quarter. Shifting focus to profitability then, and infra materials, 75% growth, metals and mining yet again 69% growth, and consumer durables too have reported solid 61% growth on a year-on-year basis when it comes to profitability. Let's talk about individual stocks then, some outliers that we have seen in the fourth quarter. On the revenue front, Eternal is at the top of the list from the Nifty 100 companies, reporting 200% revenue growth YOY, and Titan is second in that list, 78% growth on a year-on-year basis. Shifting focus to EBITDA then, that's the second metric that we need to look forward to. Eternal has reported a strong 500% growth, and Masgao Dock has also reported a solid 360% growth in the fourth quarter. Lastly, as far as PAT is concerned, we have two metal counters which have reported solid profitability expansion in the fourth quarter: Tata Steel at 125% and Vedanta at about 92%. So that's how the fourth quarter looked like across segments, across companies, and on the revenue front, a solid 41% growth is what we have seen.
Sisha, for that, let's look at some of the stocks which are going for rebalancing, starting off with Federal Bank. The estimated inflows is around $402 million for Federal Bank. Then they have Indian Bank, where $234 million of inflows are expected. Adani Energy Solution, $246 million $246 million is expected. You have Nalco, again $265 million of inflows are expected there, and MCX $258 million. Two stocks which are getting deleted are basically Rail Vikas Nigam (RVNL) and Jubilant Food Works, where there will be negative outflows also going in there. Aside of that, a couple of stocks where we have seen some weights going up is SBI Life Insurance, Divi's, Tata Communication, Tube Investment. Those are the stocks where we have seen some weights going up in the MSCI rejig there, and then there's a whole host of stocks where the weights have come down for the stocks in the MSCI index, and that coincides with the decline in India's weight in MSCI index as well. Ambarish, how do you look at some of these stocks which are getting added to the MSCI index, like a Federal Bank and Indian Bank?
So typically, whenever any stock is being added or the weightage increased, you normally have buying happening. But despite that, today we are seeing that it has not really had too much of an effect on these counters, which shows that today's weakness is decently high, because of which we have seen a correction across. And I think because of the sort of volatility which has happened because of this MSCI rejig in the like in the last couple of minutes, I believe a lot of stop losses also have got hit. I think that's the other reason why we have seen the markets correcting.
Metals pack is something which was the most active pack this week, Amrish. What's your view on them?
Metals, in fact, have been positive for a while, and I would be more positive on ferrous, which is Tata Steel, as well as SAIL, and in the non-ferrous, I'm more comfortable with aluminium, which would be Hindalco and Nalco.
And in the consumption pack, HUL, Dabur, and Marico, how do you look at that pack?
I think that would be more of a longer term, because I think consumption will take a bit of a hit because of the sort of inflation which we are seeing because of the oil price increase and across. And at the same time, we are also expecting that there could be a possible rate hike and not a rate cut. So keeping all these things in mind, I think consumption to a certain extent can get affected over the next 1 or 2 quarters. So I think one can go a bit easy on FMCG as well as consumer goods.
Ambrish, just hold on for a minute. We'll go to Rabinder, who has some stocks and news to watch in today's trade.
Well, as Wockhardt Limited is in focus, where Indian drug regulator has granted marketing authorization to Wockhart's breakthrough antibiotic Zynis. So back of this positive news flow, Wockhardt is in buzzing in today's session. Apart from this, from the IT space, Wipro is also in focus, where company has expanded ServiceNow partnership to embed agentic AI workflow across core enterprise like IT, HR. So back of this positive news flow, Wipro is also in focus, and yesterday also in Wipro ADR was up more than up 20%. From the defense wise, Bharat Dynamic is also in focus after reporting a very weak set of number in Q4 FY26. Company revenue grew by 73% on a yearly basis, and EBITDA margin has also declined from 16.8% to 11.5%, and the financial were impacted mainly because the company's execution was impacted by delays in supply of radars, seekers and other components of Akash and Astra Mk1 missile from the external vendors, and after this brokerages has also turned negative, where Motilal Oswal has downgraded the stock to neutral from buy and cut target price rupees 1150 as compared to earlier target price rupees 1500. LG Equipment is also in focus after reporting its Q4 FY26 earnings. Company revenue was up 12% and margin has increased from 15.1% to 15.6%, and automotive business has also achieved double-digit growth when compared to the same last year. And lastly, Relaxo Footwears is also in focus after reporting very strong set of number in Q4 FY26. Company revenue grew by 8% on a yearly basis on the back of strong demand, and net profit has also increased from 56 crore to 68 crore, and margin has expanded from 16.1% to 16.5%. So back of the very good set of number in Q4 FY26, Relaxo Footwear is also in focus.
Thanks, Ravinder, for that stocks and news. As we said, there's an MSCI rebalancing happening, and as a result of which we are seeing a pressure coming on the Nifty because of some of the key indices are losing their weights, and that's seeing some selling in those stocks there. But let's look at those stocks. A slew of stocks are in focus on the back of MSCI rejig. Stocks like Federal Bank, Nalco, MCX and Adani Energy are expected to see flows. SNI is here with the details.
Right, absolutely. So it's the MSCI rejig that we are looking at right now, and that impact is playing out on the market. We've seen the sharp fall in the market as we speak. Let's take a look at what this rejig is. As per estimates from IIFL Capital, Federal Bank is likely to see the highest passive inflows of $404 million on probable MSCI inclusion. Other than this, likely inclusion candidates include Nalco, that could attract inflows to the tune of $265 million. MCX could see inflows to the tune of $258 million. For Adani Energy, this could attract $246 million. and Indian Bank could see inflows to the tune of $234 million. While these are possible inclusions, let's take a look at the possible deletions. RVNL could be one, and the outflow here could be to the tune of 144 million rupees, $1 million, pardon me. And Jubilant Foodworks could also witness outflows of $112 million. Other than this, let's take a look at the key weight increases and reductions in existing candidates. It's names like SBI Life, Divi's Labs, and Bajaj Holdings that could see weight increase anywhere between $7 million and $21 million could be the inflows over here. And on the flip side, for key weight reductions, watch out for names like Infosys, HUL, ONGC, M&M, Coal India. The outflows could be anywhere between $109 million all the way up to $273 million for Infosys. So watch out for all of these stocks. And lastly, the market impact. Of course, that's something that we're seeing playing out in the market because the MSCI rejig takes place in the last 30 minutes of trade, and that has impacted the market, and that is why we're seeing a sharp fall coming in the Nifty as we speak.
Thank you, Sneha, for that. Ambarish, how do you look at some of the banking stocks today? I mean, we're seeing some pressure on the private sector bank, but public sector bank like SBI and others?
No, I think in the last 18 months or so, we've seen a very good move in the PSU banks, and post that, we've also seen a correction, especially in stocks like SBI. But at the same time, if you see the last 2 to 3 years, the private sector banks have underperformed. So at this point of time, I would be more bullish on the private sector banks, especially banks like HDFC Bank, despite the sort of controversies which are there. If you're talking of the next 12 to 18 months, I mean, as an institution, I think we should see like HDFC Bank bouncing back. I mean, once these controversies get over. Among the others, it would be ICICI Bank, Axis, and Kotak. I mean, these are the top private sector banks where I would be positive. Among the smaller ones, it would be IDFC First, where again, I mean, we had seen a lot of controversies because of which we saw that fall from 90 plus levels to closer to 60, and now at least there's some good news coming as far as IDFC First is concerned. So I see this stock again bouncing back to those levels of 1995, possibly over the next 9 to 12 months.
Holding up today, Ambarish, is the IT sector, even though it has come off days high. How do you look at this entire trade of IT? It was at one point in time up nearly 1.5%. It's now just up 0.5%.
I think it's only a temporary sort of a bounce because anyway, IT has been underperforming, no doubt. But I see this continuation at least for the next 3 to 4 quarters because whatever said and done, the AI issue is there for sure as far as the Indian IT stocks are concerned. There would be like margin pressures going ahead. Again, the question of the order flows, whether it will continue the way it had in the past. So looking at all this and at the same time, the sort of management commentary which has been coming, I would prefer to wait at least for the next 2 or 3 quarters before deciding whether to buy into IT or not. And even if I do, it will be more on the mid-cap IT names as compared to the large-cap ones.
We're starting to see a couple of stocks trend in the green. You've got Indian Bank, which is up 1.6%. There was expected to be buy flows coming in there. There's also Federal Bank, where there's been a block deal, but largely at current market price. You're seeing a couple of those. Look at the choppiness on that stock. On the back of the rejig which is playing out, plenty of choppiness, 284 to 293 in a matter of minutes, and well, that's entirely the MSCI rejig trade which is playing out. Okay, June seasonality though, what do you expect? Ashesha, you got May right, you got April right as well. What's happening in June?
Well, yes, we are coming to the fag end of the month of May, so we decided to take stock of how the month of June could actually look like for Indian equity markets. And first up, let's put the spotlight on the sectoral performance, especially on the major indices. So Nifty has given an average return of about 1.6%. That's the average over the last 10 years. But the broader markets have performed really well. We have Nifty Mid-Cap Index with an average return of 2.6% and the Small Cap Index, which has given an average return of about 3.4% over the last 10 years. Let's also talk about the number of times these indices have ended in the green. So Nifty has ended in the green 6 out of the last 10 times. Mid-cap index and small-cap index have ended in the green 7 out of the last 10 times. So the probability of the index ending in the green is actually 70%. Let's talk about sectoral performance then, and real estate index is at the top of that list. Nifty Realty has given an average return of 3.6% over the last 10 years, followed by Nifty Pharma, Nifty PSU Bank, Auto and Financial. all of them have given returns of more than 1.5%. On the lower end, we have metal index, which has given an average return of about 1.1%. That's the poorest performing sector over the last 10 years, and banks have also given rather muted performance. But remember, all sectoral indices have ended in the green. That's the average return that we have seen over the last 10 years. Let's talk about 3 indices which have ended in the green at least 8 out of the last 10 times. We have the Nifty Realty Index, Nifty Metal Index and Nifty Pharma Index, which have ended in the green at least 8 out of the last 10 times. And several indices have ended in the green at least 7 out of the last 10 times. We have Nifty FMCG Auto, which have ended in the green 7 times, IT and financial at 6 times, bank, PSU and energy at about 5 times. So clearly, June has turned out to be a good month historically, with the broader markets, that is the small and the mid cap index, giving average returns of about 2.5% over the last 10 years.
Okay, thank you so much for that, Ashesha. June looking better both sectorally as well as from a Nifty perspective overall. Sajid?
True, but don't go by today's numbers. It's basically the MSCI reject which is happening, and even if you look at some of the FNO, how the call writers are doing, there's a massive unwind of FNO positions that has happened at 3 o'clock, and that was coinciding with the kind of fall we saw in the Nifty. But today you have support for Nifty coming in at little higher level, but it's basically a selling pressure which is there. But 23,800 and 23,900 are good resistance, right?
Yeah, so 24,000 broadly is a resistance. So from where we've taken resistance, I think 2-3 times. In fact, even on day like today, at the start, we were on the verge of retesting the 24,000 mark, but we've slipped exactly from those levels for the indices. In fact, 24,023 is the high for the index. So it tells you that the markets are a lot more nervous at the 24,000 mark on the higher side. I think today's last half an hour, last 45 minutes move is purely on the back of MSCI selling. And it's very difficult to comprehend because when I look at the disparity between the stock prices and the futures prices, there are many stocks which are trading at a 5% to 6% discount on the futures at the current juncture. So it's a lot more skewed at the current juncture, which is why in this kind of a scenario, it's very difficult to try and preempt or even anticipate any kind of a view on the indices.
I was looking at the indicative close for the Nifty at this point in time based on the VWAP, which is there. 23,557 is the kind of level which is there for indicative close for the Nifty at this point in time. So yeah, there would be some pull up which is going to come in. Ambarish, how do you think traders should look at this kind of volatility, especially when it comes to rebalancing days?
No, I think the sort of stop losses one should keep, I think, on days like these should be much deeper than normal because, like I told you earlier, I've been hearing a lot of people, complaining about the stop losses getting hit and, positions getting closed. So either on days like these, don't really have huge positions open or keep deeper stop losses because I think Monday could be completely different than what we're seeing right now.
Do you think there will be a bounce back on Monday?
I think so.
Kunal?
Okay. Ambrish? Okay.
Do you think there will be a bounce back on Monday, given the fact that it's kind of
very difficult to say? Very difficult to say. See, it's an adjustment because of the MSCI, and as I said, many of the stocks are at a 5% to 6% discount with respect to their spot prices. It's just that that disparity narrows for stock prices, and because of that, maybe the stocks which are at a discount right now, they could try and come back and close the gap for themselves. There could be an individual bounce back into many of these stocks, but I'm not sure whether it will trickle back to the entire indices, and that too I think in the same magnitude like what the correction has been in the last 20-25 minutes.
On the Nifty 500, the top gainer for the week is a Wockhardt. Ambrish, does it surprise you? And if at all, what's your thesis around Wockhardt? What's the view there?
In fact, Wockhardt I've not really tracked it very closely, so a bit difficult for me to really give a view.
Okay. What about some of the renewable energy plays, Ambrish? The likes of an MV, the likes of Premier Energies, the likes of Vari, still looking interesting?
Yeah, still looking interesting at this point of time because clearly I see, the focus of the government, which was there till 2030, will surely get extended. I think thanks to the, sort of issues which we have faced because of the US-Iran war and the energy shock which the world has faced, I think there would be focus back on renewables at least for a much longer time than what is being seen right now. So something like a Wari, I think one should still be buying. Whenever there's a correction, utilize that to buy.
And what about the auto stocks? They've been on a tear since the GST announcement back in August. What next for these? Because you're starting to see raw material price spikes. You're starting to see now crude as well. In fact, petrol and diesel as well at the pump go up in terms of pricing. What's the view there?
I think those who are able to shift to EV much faster. For example, we have seen Tata Motors really talking of increasing their output as far as EV is concerned. So I think that's going to be the game going ahead because what possibly the demonetization and 2020 COVID did for online transactions. I think this energy shock will do for the EVs. Because I think that shift from IC to EVs will become much faster because of this. And going ahead, we'll clearly see the demand for EVs increasing exponentially. So the ones who are able to shift much faster, like Tata Motors, I think should do much better.
% higher on Tata Motors PV for the week gone by. Kunal, what's the view there?
Yeah, so far it looks attractive. It's been one of the few very rare stocks in the auto pack which have made a good comeback. It's broken back about the 200-day moving average. We typically watch this level very, very closely because a break of 200 DMAs generally could trigger new trends into stock prices. So we can expect that maybe similar could be a trend for Tata Motors PV. That support level of this 200 DMAs at 370 mark. So I think we just probably want to keep a close eye on this closer support levels for Tata Motors PV. But as of now, in the last 1 week, 10 days, the recovery from 340 levels to 400 plus, which it traded for a good part today, I think indicates that we could be looking at a near-term turnaround of sorts. 370 is a critical support for Tata Motors PV.
Okay, critical support at 370. Within the metals, Ambrish, very quickly, do you still continue to like metals?
Yeah, like I said, I'm bullish on ferrous, which is Tata Steel as well as SAIL. And in the non-ferrous pack, I'm quite bullish on aluminium, which is Hindalco and Nalco. If you ask me about something like a Hindustan Zinc, I think it's already, the run is more or less done. I think at these levels, it's fully priced. So I'll not really be buying something like a Hindustan Zinc or Hindustan Copper.
Okay, Ambrish, thank you so much for coming in, giving us your perspective. We'll let you go on that note. Kunal, stay with us very quickly. Just want to take a couple of calls with you while we're at it. For the week gone by, you've got some big movers, Wockhardt being one of them. But outside of that, you're seeing the likes of an MV, HFCL. Give us a sense. What's the HFCL chart looking like?
See, right now at current levels, it's very difficult to call in a trade for HFCL because the stock is at 100% divergence from its 200-day moving average. The 200 DM is at 80 rupees for HFCL and the stock is at 178, 180, the last I'd seen for the stock price. Now, at such a kind of a divergence, it's very difficult for the stocks to sustain this level. There is an eventual process of a price correction, which initially happens for the stock price. And I think that's where one should try and take advantage of, but not to buy at current levels.
Okay, Nifty down 1.25%. We've recovered from the day's lows for sure. Some of the high flyers of the day. Tech Mahindra, HCL Tech, Wipro. Really, it's the IT pack which is leading, but the IT index itself has fallen quite sharply from the day's highs. Nestle is the other one. Asian Paints is the other one, which has closed just about in the green, but the breadth looks extremely tough on the Nifty 50 index. Power Grid has fallen 4.5%. Interglobe is down 3+%. Bajaj Auto, ONGC are just some of the other casualties of the day. For the week gone by, essentially, and now we need to also track the month because, we're at the closing for the month as well. ONGC has been the standout in terms of underperformance for the week as well as for the month. Max Health as well is the other one, which has taken it a bit on the chin, 6% lower for the week gone by. Week numbers continues to weigh down with regard to the stock price performance. ITC, HDFC Life are just some of the other weaklings in trade this week. Strong ones, Tata Motors, PV, Adani Enterprises. What a stupendous run that stock has had for the week as well as for the month. There's L&T, there's Eternal, there's Tech Mahindra. All have been decent movers for the week gone by. Grasim has moved up 12% for the month. Asian Paints is up 10% for the month as well. You've got Bajaj Auto, which is up 10% for the month, and Adani Ports is the other one, 9% higher for the month gone by. SBI, Power Grid, ITC are just some of the big losers for the month gone by. So those stocks broadly are what we've got on our radar. Within the Nifty 500 basket as well, for the week gone by, you've seen some, again, very decent movers. And SEM India, NetWeb Technologies, I mean, given the move today, you've got Aditya Infotech, Adani Total are just some of the big movers for the week gone by, all moving up over 18% for the week gone by. Some real sharp moves. On the lower end, 15% low on Polymedi on the back of numbers. GE Shipping was down 15% odd. Natco down 14%. A bulk of that loss coming in today with regard to where a Natco is concerned. Those very weak numbers weighing down. There you go. The entire loss, in fact, coming today. Jyoti CNC down 11% again on the back of numbers today as well as for the week gone by. You've seen some other big movers, the likes of an MCX, which is down 8% today, 10% for the week gone by. So those are just some of the big movers in trade both today as well as for the week gone by. We're completely timed out on this edition of Market Close. From Sajid, myself, everyone who's put this show together, thanks so much for watching. Stay with us here on ET Now. We will have a very special show at 4 p.m. trying to give you a flavor of what the numbers for Q4 look like overall at a Nifty level. And we'll have that special piece on that show. We'll have Dhananjay Sinha join us to dissect that part. Stay with us here on ET Now.